Hello traders and welcome to another video review. Today is Monday, September 18th, 2023. Let's find out what's going on the Forex economic calendar today. As you can see, during the London session, there isn't any very important data release. All we got are some speeches, some kind of remarks from the ECB officials. At 11, ECB, the Guindos will give a speech. Then at 2:30, we got ECB Elderson speech. And at 5 o'clock, we got ECB Panetta to give a speech. At the end of the day, one more speaker. 11 o'clock, German Buba Mauderer will give a speech as well. In the meantime, we got data from the Canada housing starts and RMPI. Housing starts are scheduled for release at 2:15 and the RMPI at 2:30. One more quite important data release is at 10 o'clock. TAC net long-term transactions from the US is scheduled for the release. So as you can see, pretty easy start of the week, which is why we should do the review of the majors, and we are going to start with euro dollar. The euro dollar daily chart still looks bearish. The reason for that is a very big candle, down candle made on Thursday. Then of course before that some kind of another spike to the downside was made, so we are now trading below 50 and below 100 periods moving average, so the outlook is bearish. Momentum is negative. Momentum couldn't even break the level of 50 when they got the chance during this bounce here. So there's still room to the downside. There's still room to the downside on the other side. There's still room to the downside on the market. Moreover, we got the hand and shoulders price pattern on a daily time frame chart that we've been following for weeks now, and as you can see, this very nice pattern is still in progress, because the target, the projected target, measured from the top of the head to the neckline and from the neckline, is of course still ahead of us, because the target is around the 1.0550. This is the level. This is the target. This is the level and target for the bears. Right now we are testing the technical support from the end of the May 2023, which is located at 1.0631. So if we break below this level, if there's a daily close below this level, then we should expect another spike to the downside, and head and shoulders pattern should be of course then closed, because we hit the target. But if we look closely, the black line is the target of the head and shoulders, but just below it there are two very important levels. This is like kind of a demand range made of the lows from the March 15th and January 6th. So any breakout below, especially the second one, which is located at 1.0484, would mean that we will have a new yearly low on the euro dollar. So what we should expect is that bulls will definitely defend this level. They want to see some kind of a bounce here. They want to resume the up move. But if we zoom out, okay, so we should clearly see that this is key level for another reason, because if we break below this 0.0483 level, then of course the whole movement to the upside would be terminated, and we will enter another downtrend in a longer term, which is why this is very important level for the bulls, and they should defend it. But we are not there yet. We still have some levels to hit on the euro dollar. We got still some target levels to hit, so don't go too much ahead of the current situation. We know what to do. We got the levels for the bears. Maybe we should say something about the situation for the bulls, because this pattern or the down move can be easily let's say terminated if we break first above the level of, let's say, 1.0766, which is the technical resistance, and then we need to break above the 50 and 100 periods moving average. Then if this market would still be going upward, the outlook might change to more bullish, targeting 1.0946 and 1.1062. Just maybe that's the scenario for the boost. Okay, so now cable. Let me just make sure that our chart is okay. All right, now we got the 4-hour chart of the British pound. Let me switch to the daily maybe, so we can have a better view of the current situation, because right now, as you can see, this market is under the let's stick with this. This market is under the bearish control, but we hit the level of 30 already. Around this level we are extremely oversold, so we got this let's say the technical support located here, so that's for sure 1.2310. so that's the next target for the bears. Right now we are missing roughly around 80 pips for this level, so we might see kind of a spike here, and then of course we might see some sort of the, let's say, bounce to the upside. But if please notice that we are trading below 50 and 100 periods moving average, we have the bearish cross here. So if we add one more level here, if we add, let's say, some sort of the horizontal ray and indicate the key technical resistance, we can clearly see it's roughly around the level of 2590, sorry, and this level is just in line with the 50 and 100 periods moving average crossing. Okay, so that might be the key level for the bears. They will defend this level because they don't want to get they don't want the price to go higher, because that would change the outlook to more bullish in the short term, of course, right? Line wise or channel wise, we are again facing big problem if we are bulls, because there are problems because of this trend line here. And take a look here, it's just preventing any kind of a bounce, any kind of a sustained bounce to the upside, because it's located that way on the chart. So again, from the technical point of view, very unfamiliar territory for the bulls as well. So bearish outlook continues unless some sort of the behavior will be made in the other direction. On the other hand, US dollar to the Japanese yen daily time frame chart is looking bearish, despite the fact that the market is still diverging. Okay, so we got this arrow here, which shows us another swing to the upside was made. Okay, so the market is rising here. Nevertheless, on the momentum, new highs are being made, fine, but these new highs are being made with the declining momentum. So sooner or later, this situation might resolve to the downside, despite the fact that the momentum is still strong. It's still positive, around 60 points. Nevertheless, it might be quite difficult for the bulls to break above the key psychological level. I guess it's located up at the level of 150. So if we put this level into our attention, I almost hit it to the pip. So that's, let's say, the target for the bulls in the near term, 150. Nice round psychological level for the US dollar to Japanese yen. Before we will hit that, we might see deterioration lower, because that's been on this market for too long. As you can see, the US dollar to the Japanese yen last two declines were quite substantial, because the last one was 5.35%. so that's the last important correction, and the previous one was 5 something. There you go, 6%. So there is still a room for the US dollar to Japanese yen to, let's say, pull back or make a corrective cycle roughly around 5%, and that should not be any kind of the surprise for the boost. So we should wait for the 5% decline and then another resumption of the uptrend. Why it is an uptrend? Because we keep making higher highs, we keep making higher lows. It looks like the bulls are under control of this market, and we should of course stick with the trend. The trend is your friend, and we should wait for this market to do the potential corrective cycle and then resume the uptrend, targeting 150. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.